Bloomberg Audio Studios. Podcasts, radio, news.
Barrick reported earnings this morning. The miner announcing it bought back nearly 3 million shares in the second quarter, maintained its quarterly dividend. You can see the shares are up more than 6% in a down market. Joining us to talk about this more is the CEO, Mark Bristow. Mark, great to have you on the program. Thanks for joining us. I wonder if the buyback and the earnings beat, all this positive news is enough to catch up with your rivals in terms of your share price performance, because you've lagged the biggest competitors out there.
Hello, Matt. Nice to chat to you again. Yes, it's always easier to come from behind, So good set of results, nice margins. We were able to really deliver the margin from the rising gold price into the bottom line, which is good. Margins on gold were up a lot, even more so for copper. Prices were flat, and those prices will start coming down now on the back end of this year as we address some of our investments in sustainable production and at the same time bring up the production on some of our core assets. And I think what's really starting to resonate with the market is the fact that we've got real growth, that we did our deals back in 2019, 2020. Embedded in that, there were no premiums paid, and now we've got some world-class assets that are starting to show themselves for what they are, and supportive of our announced 30% growth by the end of the decade.
Mark, elsewhere this morning there was a $1.6 billion deal announced in your industry of Gold Fields and buying a Canadian company here, giving them control of a full project in Canada. Wondering about your reaction, your competitive reaction. Is this the time now for more M&A, and can you see yourself pursuing deals to be expanding?
So Sonali, nice to chat to you as well. This is a deal that Gold Fields bought half of the asset just a little while ago. It's buying the whole company now. It fits maybe with Gold Fields, definitely doesn't fit with the Barrick size and return that we look for. It's very interesting, some of these transactions. We've seen the BHP Lundin transaction on copper in Argentina. We're very cautious on doing big M&A transactions that are long dated on the delivery in a hot market like we've got today. I think what we're showing is that we've got lots to deliver from the transactions we did 5 years ago, and they are real value creative transactions, not just relying on an increasing commodity price.
Mark, I'm curious as to your take on the value of gold as a hedge against inflation. As you mentioned, your margins are stronger, and cost inflation for you has peaked, really, I think, for consumers as well, and yet gold continues, in terms of price, its march ever higher, not really on the back of a weakening dollar either. What's driving this rally, if not inflation or weakness in the greenback?
Matt, I've spoken to you about this before. The risk of a hard landing is still real. And we saw that little anxiety come through the markets a week ago. And the dollar is weaker relative to the gold price. That's the ultimate measure, because the dollar is the strongest of all the paper currencies. But what it's showing is that, and the developed economies are all having to deal with very large amounts of debt relative to their GDP. So the global economy is not in good shape. China is not where it was just a few years ago, and neither are any of the developed Western world economies. So, and the gold price is telling you that. So, and what's interesting just recently is that we saw a big focus on buying physical gold, which drove the gold price up, to the 2,200 and above. But now we're seeing a move back into the ETFs, and it's nice to see the reaction in the equities. this is the what we invest in Barrick, is we invest in high quality assets, and ultimately the market recognizes that, and you'll get the lift up in the equities, and at the same time our returns to our shareholders through dividends, capital returns, etc., has been on a level with our peer group. We've got embedded value in our business, and we don't have to go and do M&A, although we never give up on M&A, but we don't have to go and do it at a level where it's not easy to see value creation.
Mark, I'm equally interested here to talk about copper. If you think that a risk of a hard landing is still real, and copper had slumped 19% from its May peak, you do see a rebound now, but do you think that there's a bigger floor of copper prices that you have to be aware of here?
Yes, Sonali, absolutely. I mean, we've all talked about a very volatile next 2 years in copper. You know, copper really gets driven by many factors. One of them is the global economy, the perception of economic health in the world today. At the same time, we saw a sudden tightening on the supply side early in the year, last year as well, with the Panama situation. But we haven't seen the pull on the buy side yet. But ultimately that'll come, because the copper industry is ex-growth. It will come. I've always said, you know, our expansion in Barrick into the copper business comes in 2028. It's a great time to bring new copper production into the world. And so we're very comfortable with our investments. We do believe ultimately copper is in short supply, and it's going to get shorter and shorter. And so that's good for the copper price. But in the next 18 months to 24 months, it's going to be very volatile.
Mark, great to get some time with you. Thanks so much for joining us. Mark Bristow there is the CEO of Barrick Gold, and the shares are on a tear today.